everybody, Jamie with Sell for 1%, joined by the gang here, Dave Barlow, Jason Barlow, and Mike Hopper. And Mike, we're going to do a little market update. And what are you seeing in the market right now?
So I have lots of conversations with buyers each day. It's not a lack of buyers in the market that I'm seeing. It's hesitation with interest rates and where they want to push forward is what I'm noticing in all the conversations I'm having. I think my most frequently asked question is, what does the market look like in 3 months? What do interest rates look like in 3 months? Obviously, I can't predict the future as we have our conversation with Richie each week that things have changed drastically in the past 2 to 3 weeks when it comes to rates. Inventory is low. Although a lot of the properties I've made offers on in the past 2 weeks, I'm still seeing multiple offer situations. If it's a nice house and it's priced right, expect competition. But that's what we're good at. So you want to give us a call when it comes to negotiating those types of properties. But I think inventory and interest rates are the biggest struggles right now with buyers, and that's kind of what I'm seeing on my end.
Yeah, I would agree with you on that.
I'm seeing kind of the same thing on the listing side. You know, I primarily work with sellers, and we, in 3 months from November to this morning, have lost about a third of the available listings for sale. We were up around 3,300 active listings in the entire MLS. As of this morning, we're at 1,927 active listings. So we've lost 1,400 listings in 3 months. And, you know, there's normally around the first of the year, there is typically a dump because a lot of listing agents will write their listing contract to expire at the end of the year. And so that first week of January, you typically see a little bit of a dump. But then with what we've seen over the past, 2 months of the new year, it's continued to dump. And like I say, we got 1,927 active listings in the entire MLS. And that goes from up in Marion down to just north of Chillicothe, over east of Newark, and not quite to Springfield. It's a pretty large geographical region. To put things in a little more perspective, it might be a little easier to visualize. In Franklin County, where we have 1.1 million people, 400 and some odd thousand houses, we have 783 active listings in the Columbus area, Franklin County. That's going back to some of the levels that we were experiencing a little over a year ago in the super hot markets. We were getting down into the 500-600 range, and it's just for buyers. And again, as Mike, you mentioned, we are starting to see not the crazy multiple bids that we had a year and a half ago where we'd have 15, 20 offers. I'm seeing 3-4 offers start to float in on our listings, and it's a good thing for sellers. It's also a good thing for buyers because you're not having to come to the table with $40,000 and $50,000 of appraisal gap money, which was pretty normal about a year and a half ago. So the market's tight. I think sellers in particular don't want to sell because they got a 3% interest rate, and then they have to go buy something at 6.5%, and they're like, well, we'll just sit tight. But the good news is that we still have 40,000 people a year moving into the Columbus area. In fact, MORPC just came out a couple days ago with their projections that in the next 25 years, we're going to see 726,000 people move into Central Ohio, and that there's going to be another 272,000 houses built in the next 25 years. So is it 10,000 houses a year? Ends up being 250,000 over 25 years. So
that's why.
Yeah. So people moving here, they've got to have a place to live, and it'll all it ebbs and flows. We saw it in 2001, we saw it in 2008 to 2012, and now we're kind of seeing the same thing with this crazy inflation rates impact the market, but it'll all ebb and flow. And I think, Jamie, you have a great saying, marry the house and date the rate. And so, I mean, appreciation values are still going up 10, 12% every month. We're not seeing that drag. And so even though you're paying a higher interest rate, if that house goes up, a $400,000 house goes up 10%, next year you're paying $450,000. And so are you better off to try to get it now and take advantage of the appreciation rates that are out there? And then when rates do drop to a more reasonable level, you can then refinance. So anyways, that's what I'm seeing kind of on the seller side. Jay, are you seeing anything different?
I mean, no, I'm seeing relatively the same thing. It's an interesting market out there.
Most definitely. All right. Well, any other input there, Jay Marinsky? You're a buyer side guy.
Nope. Like Mike said, if it's priced right, it's a nice house, it's going to go. Not as much inventory, and supply and demand is kind of doing its thing. Our listings are getting multiple offers, and with our experience, we know how to deal with that sort of thing on both sides of the table. So give us a call. We'd love to help you guys out any way we can.
Sounds good. Thank you.